Okay, well, I hope you guys are in for a cool lesson today. We redesigned some of these things. I want to show you guys some of the stuff that we've been working on and talk a little bit about algo trading and why it makes me very excited about the future of investing. We'll see if you feel the same way. I think you will. I think it's a pretty obvious choice here, right? Okay. So we have some people in here. I'm gonna just get started, right? So I'll kick it off, right? So today we're gonna be talking about how to master algorithmic trading. We're gonna be talking about some of some insights into our top performing strategies, right? So what are some of our top performing strategies? We'll show off a couple of them. We don't have time to show off all of them. There's quite a few that we have. I think we have something like 50 different strategies at this point. So I'm just going to show you a couple of the highlights and just try to mix them up a little bit so you see kind of a few different types of algorithms, right? This is our agenda for today. So first of all, I'm going to give you guys a link to this presentation, right? So let me get you this link, share, copy link, and I'm going to put this into the chat so that you guys can access this, all right? Go back into full screen mode here, all right, so you guys can follow along. All right, so I'm going to give you a link to the presentation. We did that. I'm going to tell you a little bit about myself, right? Why should you care to listen to me at all, right? I'll tell you a little bit about me, tell you about Lumi Wealth and kind of what we're up to, what we're trying to build, and what we care about and what the mission of our company is, and how that relates to you, most importantly. I'm going to give you a few helpful links, some things that I think you'll find very useful, right? We'll talk about how algorithmic trading works in the real world, right? A few real world examples. You'll see a few hedge funds and what they're doing. And then I'll show you these strategy examples. I think probably the main thing that you guys are interested in seeing today. We'll go through some strategy examples and you see some cool stuff. Then we'll talk about how to continue your learning if you want to keep learning this stuff and keep doing more. And then we'll take any kind of questions that you have. However, please don't wait until the end for questions. If you have any, please let me know much sooner. It's much more interesting when we have a dialogue going on. That's why we do these live, so you guys can ask the questions and get involved. Right? Okay, so a little bit about me. My name, I'm Robert Grezik, pronounced Grezik. I've been programming for over 25 years, right? I have a master's in finance degree. I went to a top school in Canada. Means I paid a lot less tuition, but it was kind of like an Ivy League school called Schulich. If you guys have ever heard of that. I worked on Wall Street for a while, moved to New York a couple years back, and worked on Wall Street for a number of years. So learned a lot about kind of the tricks of the trade and how things work down there. I was also employee number 4 at a company called Voyager. For those of you that are not familiar with Voyager, it was a very large crypto exchange at one point in time. It was one of the biggest crypto exchanges in the world. It was trading at $3 billion at one point in time. I was employee number 4 at that company, helped create it from scratch. Basically, when I was there, nothing existed. We built the thing up from nothing. It's really cool seeing that skyrocket to $3 billion. That's pretty amazing. And right now, I'm the CEO and founder of Lumi Wealth. Right? And what is Lumi Wealth? I'll tell you about that in a second. But we've been working on this company for about 4 years, and something that I'm very passionate about, and so are the other people involved in our company as well. Right? So I have a lot of experience in code. I have a lot of experience in the financial field, and hoping to bring that to you guys, right? And helping you guys out. So the way that I'm hoping to do that, or the way that we are working on that, is through Lumi Wealth, the company that we founded back in 2019. So it's been about 4 years that we've been around at this point. So why do we create this company? Right. So the whole reason for this company to exist, Lumi Wealth to exist, is to help people invest better, which basically means higher returns and lower risk. Right. So really, my job is to make sure that you guys end up being more successful at all this stuff. Right. That you guys make more money, you guys take on less risk, and that you guys are happy with your financial outcomes. Right. So how are we doing this? There's a lot of people that are trying to do this in the world. We have a unique way of doing this. You might see all the traders out there on YouTube talking about, check out my strategy and all that. I'm very much a believer that there's a better way to do it, right? Instead of us focusing on, your trading things and looking at different charts, all that kind of stuff all day long, and just really kind of just winging it in a sense, using your emotions to trade. I think it's a much smarter thing to do to use software and AI to trade, right? So that's going to allow us to do a lot of very interesting things. We'll talk about why this matters so much today. But basically, using software and AI, we're able to be a lot smarter about our investment decisions. We're able to be much faster, less emotional. It's going to give us a lot of huge benefits when we're doing this stuff. So we're helping you invest better, higher returns, lower risk, and we're doing that using software and artificial intelligence, right? So how are we doing that right now? And what are we building? Like how do we actually accomplish this? Well, right now we have courses on algorithmic trading, the one that we're talking about right now, our algo trading course. We have a bunch of other courses as well that help you along those lines. And then we're also building software to make this easier. And we're going to be doing a round of funding. We're going to be raising about $500,000 to $1 million in the next few months. Basically to help build out some software to make this even easier. We've been building software over the past 4 years, and when you see our tools, it's really made things quite a bit easier. But we want to take that to the next level and really use all these new advancements in AI to help you guys build out some really good strategies and make a lot of money doing this stuff. All right? So that's what Lumi Wealth is. That's a little bit about myself. I also want to give you guys some helpful links. All right, so here's some stuff. If you guys want to learn a little bit more about what we do, here's YouTube. Here's a link to YouTube. I put that into the chat. Right, so if you go inside of the circle thing, there's a little chat icon. You can click there and click into our YouTube. Make sure you subscribe and follow us, all that sort of thing. There's a lot of free content that we put out. You get to see all the new strategies that we're building. You get to see interviews that we have with other people in the investing world. There's a lot of really good content on our YouTube channel, so make sure that you subscribe and follow us. There's also our Discord channel. For those of you that don't know what Discord is, I'm going to show you in a second here. I put that link inside the chat as well. And here's our example of Discord. It's basically a chat, right? If you guys have ever used Slack before, or even like text messaging, right? It's just a chat thing where there's a bunch of people talking about this stuff. As you can tell here, it's very active. We have a very active community of people that are constantly trying to figure out how can we make more money, how can we do things better. And this is really the way that you can learn about this stuff, right? Like we have our live algo hour here. We talk a lot about, how can we improve our strategies and what can we do better. I think you guys will find this very interesting. If you guys are interested in investing and making more money, this I think will be a very good place for you to be a part of. And I think you'll get a lot out of it. All right, so check out our Discord channel. I think you guys will love it. All right. Third of all, here's a book. Here's a link to book a call. All right. If you guys want to speak to someone, you get a chance to kind of go through this live right now, and you get asked your questions and all that. But maybe you want to speak to someone over the phone, right? And really get deep into all the things that we're working on and what we're doing. This is the way to do it. Book a call with one of our staff. They're all very knowledgeable and will help you out with any questions you have or whatever you want to dig into. They will be very helpful to you. All right. And then again, just a reminder, please ask questions throughout the presentation. It's more interesting when you guys ask questions and we have an open dialogue back and forth instead of, there's a reason why it's live, right? There's a live class. This is why we're doing it. Right? Okay. So let's jump into it, right? So algorithmic trading in the real world, right? So what does this look like in the real world and what is algorithmic trading all about, right? So first of all, for those of you that don't know what algorithmic trading is, it's basically using software to analyze data and automatically make trades, right? So that can mean a lot of things, right? It's basically automating, right? So to think about it a different way, think about like trading robots, right? Think about if you could take your trading activities or your investing activities and have a robot do it for you, that's basically what algorithmic trading is, right? There's a popular misconception that algo trading is just buying and selling stocks 1 million times a second. And it can be, and that can be quite profitable at times, right? But there's a lot more to it than that, right? There's using artificial intelligence to find the right stocks to invest in. There's looking at economic data and trading off of that. There's a lot of very interesting things they can do. And I'll show you a few examples later today. In about 10-15 minutes, all the different kind of possibilities they can do. But there's a lot, just generally speaking, think about it as trading robots, these software packages that can basically do this stuff for you, right? So why do we care about this, right? Well, first of all, it makes a lot of sense from the get-go, right? A simple way to think about it, I'm going to move this up here because I think this actually belongs a little closer up, right, in our presentation. So a simple way to think about it is, investing is all about smart decisions, right? It's the smart decisions you can make, that you buy the right stock, you invest the right way, you manage your risk properly. The smarter you are about these investment decisions, the better you're going to do, right? The smartest investors, they tend to make the most money, the Warren Buffetts of the world and all that, right? Now, if you think about making smart decisions is very important. Well, if you're using software, you're using AI, you're using data to back you up and help you with this, you're going to do a heck of a lot better than without it, right? So instead of sitting there and saying, hey, I think I should be doing this or that, you can actually get real data, go into it and figure this out. Is this going to work or not? We're going to talk about back testing today. And that's very, very important for you to be successful at this kind of stuff, right? Because instead of just looking at a YouTube video and saying, oh, this guy is doing X, Y, whatever, he's buying this thing and whatever, and you just follow him, how do you know he's right? You know what I mean? Well, I can tell you, we can figure out if they're right by back testing their strategies, right? If we actually go in, simulate their trading in the past, I could tell you, is this guy full of crap or not, right? Because that's what we can do with software. That's what we could do with AI. We could do a lot more interesting things, much more than what a human being can do, and in much smarter, more unique kind of ways, right? Okay, so it's not only about, kind of logically, this makes sense, right? But this actually really does work in the real world, right? So some of the most successful hedge funds of all time, in the world, use these techniques, right? So let's talk about a couple of them, right? So one such example is a company called Renaissance Technologies, okay? These guys have been around since I think the 80s or 90s. Really, really successful company, run by a guy named Jim Simmons, okay? And he has a book, by the way. I'm going to share this book with you guys here. He didn't write it. It was someone that wrote a biography about him. He is one of the richest people on earth. Last time I checked, he was like 30th richest person on the planet, right? And it's this book about him called The Man Who Solved the Market. Very interesting book. Talks about his story and kind of how he came to be this incredibly successful trader, right? Basically, it's like the story of they started off. He was a mathematician. This is back in the 80s when computers were like really not very good. The tools that you guys have are way better than what they used to have, right? But basically, they started back in the 80s or 90s, and they started this hedge fund. At first, they weren't really making too much money. They kept playing around with it, trying different things. Basically, they were just using computers to trade for them automatically. That was the whole idea. The first year, they didn't do so well. The second year, they started doing better. By the third year, these guys are making so much money that they got the attention of basically everyone in the world, right? And these guys proceeded to keep doing that. They are the most successful hedge fund of all time, period, okay? There's no one I have ever heard of that has made more money than these people, ever. That includes Warren Buffett. That includes, name all your investing heroes. This guy has outshone all of them, okay, by a long shot. Okay, if you read this book, it's really interesting. They end up making so much money that they're like buying houses that they forgot about. This one guy bought like a mansion worth $15 million or something, and got a letter in the mail saying you built this property in a legal area, and he's like, I don't even know I own that, right? Like it's just like an absurd amount of money these guys were making, right? So let's talk a little bit about their numbers, right? So this company, what they do is they only use statistical models to trade, right? Only computers. A human being never places a trade. It is only computers trading, okay? These guys, to date, they run about $110 billion in assets, right? I think that's a little bit higher now. I got this figure like 2 years ago or 3 years ago. I think there's quite a bit more by now, right? These guys make a 66% annual return on average. This is not you made 66% in 1 year and that's it. You may have done that. You may have bought some crypto and you made 100% or 200% a year. That's possible. I ask you what happened the next year or the year after that. These guys consistently for 30, 40 years in a row have made 66% returns on average. This is uncorrelated with the stock market. So, for example, in 2008, when the whole stock market fell apart, it was down 50%. Everyone's freaking out. These guys were still making money. It was ridiculous. I think in the 30 to 40 years that they've existed, they've only lost money like in 1 quarter, and that was barely lost money, right? These guys are incredibly successful. Not only are they making a ton of money, but they're pretty much never losing money, right? It's very, very successful hedge fund. Okay? Which, by the way, is, if in case you're wondering, this is way higher than any of these other investing legends that you've heard of. Warren Buffett, nothing compared to this guy. He has 20 to 30% returns. This guy's making 66. George Soros makes about 20% a year. You hate him or love him, he made a lot of money. Nothing compared to what this guy's making, what Jim Simmons is making at Renaissance. Carl Icahn, they have a theater named after him, or a whole thing in New York City. You could go to the Icon, park or theater, I forget what it's called now. This guy is crazy rich. He only makes 13% a year, right? This guy, Jim Simmons, 66% annual return per year, absolutely killing it, right? And why is he making so much money? Well, it's really all about his computer models. He's using AI to trade, using software to trade. It is not people placing these trades. It is software making these investment decisions, right? So to give you an example of why 66% is such a big deal, for those of you that don't have a background in finance, right? I've studied this like my whole life. But for those of you that don't know how to do the calculations, or haven't studied this stuff, it is a very big deal, right? It's not like you're making 6 times more money, right? So the stock market on average makes about 10%. These guys make 66% on average, right? So 10 versus 66. You're not making 6 times more money, right? You're making 6 times more money every single year. Actually, almost 7 times more money every single year. Okay, and that compounds, right? So, for example, this year, you would have made 10% of your money, put $1,000 in, you got $100, right? Instead, with these guys, you would have like 1,700, right? It's already really good, right? But then it gets better. The next year, you get another 66% on that, and then you get another 66% on that, and it starts to snowball, right? What's it called? Albert Einstein, he said the most powerful force on earth is compound interest, and this is what he's talking about, right? So if you invest in the stock market, 10%, $1,000, okay, that would turn into about $6,000 after 20 years, almost $7,000, 6,700. It's like working towards your retirement. Good investment, right? There's not a lot of other things in the world that could pay you that much. Maybe real estate, maybe starting your own business, right? You can make returns higher than that, right? But that's pretty good, right? 10% a year, right? At 66% a year returns, though, that same $1,000 is not going to make you $6,700. It would have turned into $25 million after 20 years. That is one heck of an outcome. That's a very big difference between 6,000 to 25 million. That's a very, very big difference. And now we're starting to understand why he's one of the richest people on earth, right? If you look him up on the Forbes list, he's like number 30th richest, and he's climbing quite quickly. This is the reason why, because he's making such extreme returns year after year, even though he's managing $110 billion, right? For you guys, when you're managing smaller amounts of money, you might be thinking, Jesus, how do I accomplish this sort of thing, right? It's actually harder for someone like this. When you have $110 billion, it gets harder and harder and harder to make more money like this, right? It's actually easier if you have $1,000 to make 66% returns. It's easier to do that. You find one really good thing and you can make that kind of money. But with $110 billion, it is much more difficult. This guy is doing it at scale. It's crazy, right? Check him out. Read the book about him. Check him out on Forbes list. He's a very fascinating person, doing extremely well in the world of investing, right? He pioneered this whole thing. He was the one that kind of invented the idea of algorithmic trading, right? He was one of the first people that did this, right? This is why he's so successful. But he's not the only one. There's a lot of other companies doing this too. Two Sigma, if you guys look this up, last time I checked, they're managing $60 billion worth of assets. They're a huge asset management firm in New York City. I've actually met a couple people that work there. Very, very smart people, doing really well. Same thing, computers run the entire show, right? They're not having human beings step in there and buy and sell stocks. They have computer models running the whole thing, right? Citadel is another one. Okay, 32 billion in assets in their hedge fund. They own a bunch of other stuff too. But these guys are making a killing too. $32 billion in assets, making a ton of money. Computers running the whole show, right? They don't have people trading. It's not about sitting there and trying to figure out what stock is going to be the best, trying to be a Warren Buffett. These guys are very different. They have computers sitting next to the stock exchange, automatically trading for them, making the money consistently year after year. That's why Ken Griffin, one of the guys the guy that created this firm, again, one of the richest people on earth, right? Bridgewater is another one, and I'll actually show you a quote by this. A company run by Ray Dalio. You may have heard of him. He released a couple of books lately. Some very good books. I'd recommend that they read them as well, actually. What are the names of the books? Changing World Order is like the new one they released, and they had Principles before that. Really, really good books. Strongly suggest they read them. But the biggest hedge fund on earth, right? Bridgewater. And they're very much into computer models and using software to help them with their analysis of trading, right? And we'll get a quote from Ray Dalio, the CEO, actually now the chairman. He's retired, right? But the guy that founded the company, I'll show you a snippet from him on Twitter, where he's talking about algo trading and how he believes computers are really changing the landscape for investing, right? Then there's another one called D.E. Shaw. Very famous person, used to work here. If you guys have ever heard of Jeff Bezos, he actually used to work at D.E. Shaw, and that's actually where he got the idea for Amazon. So he used to work at this company called D.E. Shaw in New York City, run by, I forget the CEO's name, also very, very rich guy. Basically was helping them with building software to analyze the stock market, right? That's what Jeff Bezos is doing. He got very good at this stuff. He basically looked into, all these different things using data. He figured out that the internet was growing at this crazy rate. It was growing at like whatever 100 and something percent a year. And he's like, wow, this is really interesting. This could be something big. He went home, thought about it a lot, and that's how he came up with the idea for Amazon, right? So literally was one of the world's richest people at one point in time, and he got his ideas from these hedge funds too, right? So when you're in this field, when you're in the algo trading field, you're among some giants, some of the richest people in the world, some of the most successful people in the world, right? And that's because they're not investing like other people are, right? Other people might use their gut instincts or something like that. These guys are very analytical, using data science, using software to place their trades. They are a different breed. These are people that are really making money in a much more structured kind of way that's not like the rest of the people, right? So definitely in a very good situation when you're around all this, right? So I promised you a quote by Ray Dalio. So this is a tweet that he put out. This is almost a year ago now, but I like this tweet. It's a nice one to read. It's not the only one. Everyone's talking about AI these days, so there's a ton more out there these days, even more. But here's what Ray Dalio had to say about investing in algorithms, right? This is the guy that runs the world's biggest hedge fund, $140 billion this guy controls. Okay? So he puts out this principle of the day. You can follow him on Twitter. This guy is really interesting to follow. His principle of the day, and he put out this principle saying, convert your principles into algorithms and have the computer make decisions alongside you. Okay? And then he continued on and gave a description on this, right? He says, if you can do that, right, so meaning put your principles into algorithms and have computers make decisions with you. If you can do that, you will take the power of your decision-making to a whole other level. Okay? In many cases, you'll be able to test that principle would have worked in the past or in various situations that will help you refine it, and in all cases will allow you to compound your understanding to a degree that would otherwise be impossible, right? So he's talking about back testing using data. Without computers, it'd be very difficult to find out if you have a good investing idea or not, right? He's talking about backtesting here. Okay? He says it will also take emotion out of the equation. Algorithms work just like words in describing what you would like to have done, but they are written in a language that the computer can understand. If you don't know how to speak this language, you should either learn it or have someone close to you who can translate it for you, right? Your children and their peers must learn to speak this language because it will soon be as important or more important than any other language. By developing a partnership with your computer alter ego in which you teach each other and each do what you do best, you will be much more powerful than if you went about your decision-making alone. The computer will also be your link to great collective decision-making, which is far more powerful than individual decision-making and will almost certainly advance the evolution of our species. Big words. Very, very big words coming from a person that runs the world's biggest hedge fund. He clearly is a big fan of algorithms. I know for a fact, actually even read today on Bloomberg, that they're investing very, very heavily in AI. They're hiring a lot of people in the AI field because they want to keep going down this path and improving this. They know how valuable it is. They run a $140 billion hedge fund, and they know how valuable this is. Now you're learning the same things that they're able to get as well, right? So that's our goal, right? Our goal is to basically be able to replicate what these guys are doing, right? We're not going to be as good as Jim Simmons off the start, right? But we don't have to be, right? We don't need to be Ray Dalio. We don't need to be Jim Simmons, right? These guys are managing $100 billion or $200 billion, right? We don't need to be that good, right? We just need to be better what you have right now, right? My goal, right, and our goal as a company is to improve where you're at right now and get you to the next level, right? You know, I hope that we can get you to 100% a year or something like that, right? But if we can just do better than what you've been doing, we can make a very big impact on your future, right? So that's what we're trying to accomplish here, right? Okay, so I'll show you a couple strategy examples. I promised you guys this earlier today. So let's show a few of our strategies that we have going for us, right? This is just a couple of them. Like I said, we have a lot of strategies at this point. We build like a new strategy a week right now. If you join our live algo hour, we literally build a strategy every single week, and we're constantly refining and trying new things, right? But here's showing you just a couple. I got a little cross section so you can see the different types of algorithms and kind of what each one of them can do, right? There's ones I think even do better than this, right? But I just want to give you a nice mix so you can kind of understand what's possible, right? Okay, so let's start with the first one. Okay, so a lot of people, traders, they love technical analysis. Here's a technical analysis strategy. Okay, specifically, this is a strategy that trades cryptocurrencies. It trades Bitcoin, Litecoin, and Ethereum. Okay, you could change that if you want to. If you take our class, you could actually get the code to this and modify it to be whatever the heck you want. You could trade, you know, if you want to trade Matic or if you want to trade Solana, whatever it is that you care about, you could pick your own. Hey, but this one specifically, Bitcoin, Litecoin, Ethereum, and it uses 4 different exponential moving averages or EMAs. Okay, this is here's the code for the strategy. This is what it looks like. Double EMA trending is the beginning of it, right? And basically we use these 4 exponential moving averages. And here's our symbols, right? Bitcoin, Ethereum, Litecoin, and then our different exponential moving averages. So we have a 12 and a 32, and then a 12 and a 26, right? And we're basically investing whenever the 12 is above the 32 and the 12 is above the 26, okay? If that's the case, then we're going to buy that crypto asset, right? So we can buy anywhere from 1 to 3 or 0 to 3, right? So if Bitcoin has that situation true, then we're going to buy Bitcoin. If Litecoin has a situation to be true, if the 12 is above the 36 and 12 is above the 26, if that's true, then we're also going to buy Litecoin, right? And then we're going to do the same thing with Ethereum as well, right? So if all 3 of them are acting that way, then we're going to own all 3. If only 2 of them are acting that way, then we're going to buy 2. If only Bitcoin's doing that, then we're only going to own Bitcoin. If none of them are doing it, then we're not going to own anything at all, and we're going to step out, right? And that's going to save us, and that's going to protect us when things are falling, right? So here's the results. Okay. This is the graph. The blue line is our strategy. The yellow line is our benchmark, or in other words, Bitcoin. Okay. And by the way, Bitcoin did really well. This is from 2019 to 2023. I did it pretty much until today. Okay. I did this earlier today. This is over a period when, was this 4 years, 4.5 years? Okay. Bitcoin did really, really, really well. Our strategy did better. We did a lot better than Bitcoin, actually, right? So our blue, this is our blue line, right? This is how we did. This is the yellow line. This is how Bitcoin did. You can tell here there's a couple flat lines, right? This is when the strategy said, hey, hold on, let's get out of this. This is looking dangerous. Let's leave. So you see here, Bitcoin fell during this time, but we were flat, right? The algorithm was smart enough to exit and put us into cash, so we're not losing money during this time period, okay? Same around here, everything fell, we didn't lose money. Same around here, things were falling, we didn't lose money, right? So it's protecting us. At the same time, it was also investing in the assets that were doing the best, right? So around here is probably when Ethereum shot up like crazy. We owned Ethereum throughout the whole thing. We're up to 3,000% return at one point in time. Absolutely insane, right? If you had sold around here, you would have made 30 times your money in, was that 2 years? Freaking crazy, right? But after 4.5 years, things normalized, right? And these are the actual numerical results. So, so our CAGR, or in other words, our annual return, right? Our average annual return, it stands for compound annual growth rate, or in other words, annual return, was 80%, right? So every year we're making 80% a year, or in total we made 1,262%. Okay, that's versus Bitcoin, which by the way also did very well, right? But we still beat it, right? Bitcoin did 53, we did 80. Bitcoin over the whole time period did 566%, we did 1,200%. Okay. Sharpe ratio is also better. For those of you that know what Sharpe ratio is, it's basically a measure of risk versus return, right? Higher Sharpe ratio is better. Okay, we had a Sharpe of 1 when Bitcoin had a Sharpe ratio of 0.81, right? So we beat it that way. And that's because our volatility was lower, right? So we're making more money and we're taking less risk, or similar risk, right? In this case, actually. Similar risk to Bitcoin, but we're making, almost double the return of Bitcoin using this strategy, okay? If you guys are interested, I shared with you the Google Doc, right? So you guys can actually look at this. That was shared earlier. I'll share it one more time again in case you want to see it. I'm just going to put it into the chat one more time. Okay. You can download the full tear sheet and the full trade breakdown here if you want to see exactly what happened, right? So here, for example, I'll click on this. So it looks like it's Google Drive. So you have to, this is just like an HTML thing. You have to download it. Okay, this looks like gibberish, right? You have to download it. So hit the download button, right? And then when you click on it, you'll be able to see it. Okay, so this is the full breakdown. So you see exactly what happened. This is the graph. There's all the performance metrics, right? You can see how well it did every single year. You can see that we beat Bitcoin almost every single year, right? And you go down, there's a lot of different statistics you can see all the monthly returns, how it did month by month. You can really see all the details if you guys are interested in that, right? We also can get you the full trade breakdown if you're interested. Here, let me show you this as well. So same thing, click on it, right? It's gonna give you this gibberish looking thing, this HTML. You wanna download it, okay? And then you wanna open it on your computer as a download, okay? And this is the trades breakdown. So we could actually go into here and we could see, well, what was it doing around this time? Okay, well, it bought here this small fraction of Bitcoin. This is March 5th at 1:38 a.m. It bought Bitcoin at a price of 47,000 US dollars each. And then basically $29 is what we bought. It was a small transaction. How much we paid in trading costs, right? And you can kind of go through each one. Here we sold some Bitcoin. Here we sold some Ethereum. Here we bought some Bitcoin, right? You can really inspect and look through everything that's happening with our strategy. You see here that we sold basically everything and we were flat. You can see that our cash, we had $1.9 million at one point in time, right? This is assuming you started with 100 grand. By this point in time, by 2021, you would have had $2 million almost sitting in your bank account, which is quite astounding Right here, this is actually the best. Like when we're around this point, you would have had $2.3 million in cash sitting in your account. That would have been absolutely incredible, right? So that's our first strategy I want to demo. These trend following strategies, they're quite successful, right? So I actually really like these trend following strategies. We have a lot of them like this, right? I think this is one of the most interesting ones that we have, but we have a bunch of other trend following strategies like this using stocks. If you prefer to trade stocks, there's a bunch of things that you can do, modify this to actually trade all sorts of different things. And trend following strategies in general tend to be quite successful. I'm personally quite a big fan of them, right? So this is one example of that, that type of strategy, right? Okay, let's take a look at another strategy. Okay? Here's a mean reversion strategy, right? You may have heard about this one if you watch the YouTube people and all that, right? Mean reversion strategies, basically the idea behind them is that an asset's going to go up and down a lot, right? And when it goes up too far, you want to sell it. And then when it falls too much, you want to buy it, right? Because you're kind of saying that it's going up at a steady rate, but it bounces around a lot. So you want to make money off that volatility, that bouncing around. Yeah? Specifically, what this strategy does, right? And here's the code for it. This is how it works, right? Okay. We're using RSI and we're using Bollinger Bands, right? Specifically, this is how it's set up. Bollinger Band period is 30 days. Standard deviation for Bollinger Bands is 2. Our RSI period is 10. Our high for Bollinger Band for RSI is 75. And our low is 25, right? So for those of you that don't know what this is, RSI stands for Relative Strength Index. Basically, when it gets very high, it means that something is overheating, right? That it's probably bought too much. It's time to sell, right? When it gets really low, it tends to mean that it's oversold and it's time to get out, right? If you're doing this kind of mean reversion strategy, right? So very high RSI, you sell, very low RSI, you buy. But we're not only using RSI, we're confirming it. We have two indicators that confirm each other with Bollinger Bands, right? So Bollinger Bands kind of do something similar. It's like a little, if you go around the stock price, they kind of look like a jet stream around it almost, right? If it hits the high end, then that's a time to sell. If it's the low end, it's time to buy. So we're confirming between those two. They have to both happen for 2 time periods in a row. And that's when we say that we're buying or we're selling. Okay. So that's what this mean reversion strategy does. Basically, it's just buying and selling whatever things move too much. Okay. This strategy also did very well. We can see here we had a compound annual growth rate, right, or annual return of 85% over this time period. This from 2021 to 2022 May. I wasn't able to get this thing done. It's still running right now. It takes a little while to back test this. I was hoping to have it ready for you guys. It's going to take another 6 hours for me to get these results, but we'll get them for you. But over this time period, we made an 85 or almost 86% annual return, or in other words, 122% over the whole time period. And that's versus Bitcoin, which again has performed very, very well. Bitcoin only did 26% annual or 35% over the whole time period, right? So we smoked Bitcoin. In this case, we're getting, more than triple the return per year. It's pretty damn good, right? That's also why our Sharpe ratio is quite good. It's a 1.14, right? So higher Sharpe ratio than Bitcoin, right? So again, and you can tell, right? So volatility, the reason why a Sharpe ratio is high, right, is because our returns are very high and our risks are lower, right? Our volatility in this case, 47% versus 64%. The lower, the better, right? Because this is your risks. You want low risk and high return, right? Low volatility, high returns, right? So in this case, we have lower risk and higher returns, which means we have a higher Sharpe ratio, okay? And you can even tell, if you look at the graph here, right, you can see our strategy in blue versus Bitcoin in yellow, right? You can see how stable the blue line is, right? Like we're not moving up and down with Bitcoin like this, right? Bitcoin's doing these crazy moves up and down. We're profiting off of those things, and we're just slowly and stably making more and more money, right? So lower risk, higher return, fantastic strategy. This, by the way, assumes you have a broker that can get good trading fees. There's a couple of brokers if you're interested that could recommend to do this sort of thing. But basically, this is kind of the results here. Right? Very good strategy, very interesting thing to do, right? If you take a look, if you want to see the tear sheet or you want to see a trade breakdown, you can click on it here. Here's an example. I'll show you kind of some of the trades that it was placing, right? So we'll download this again. All right, we'll hit that download button and we'll open it up and I'll show you guys an example of some of these trades, right? It's taken a little longer than usual. There we go. Okay, so here are our trades. Place a lot of trades, as you can tell, right? Your cash, you're seeing cash quite often. So I'm actually gonna get rid of this cash here. It's a little bit easier to see. There's a lot of trades that place, right? This is a strategy that's in and out several times a day, right? Constantly buying and selling, right? And if you take a look, if we go into a snapshot here, we can see what it's doing. It's constantly buying and selling, right? So sold 3 Bitcoin, bought 3.4, sold 3.4, bought 3.4. So it's constantly just buying and selling, trying to find those opportune moments when, oh, it's overheated, let's sell it, or it's gone too far down, let's buy it. And it's just doing that many, many times a day, making you money throughout the day, right? Okay, so this is our mean reversion strategy. Again, we have a bunch of strategies like this. This is a category of strategies, right? We can build a lot of different kinds of things like this. We've built mean reversion strategies for crypto. We've built it for volatility trading. We've built many different flavors of the same strategy they can use across different asset classes in futures trading, in Forex, in crypto, in stocks, in ETFs. You can trade all sorts of stuff using mean reversion. And there's a lot of really interesting possibilities with it, right? I just want to show you one example of that. Okay. All right. So those are two strategies. I showed you two crypto strategies. Now I'm going to show you two stock strategies, right, to mix it up. And so you guys can see you can do this with many different types of assets, right? So here's a diversified leverage strategy, right? This one's interesting. Right, this one is a little bit simpler than the other ones, right? But still, nevertheless, quite powerful, right? This strategy, what it does is it invests in something called the all-weather portfolio. If you ever read Ray Dalio, his books, or you watch him on YouTube, again, he's, runs the biggest hedge fund on the planet, right? He has something called the all-weather portfolio, and he has this theory that says in order to reduce your risks, what you want to do is you want to diversify well across different asset classes, right? You want to be in stocks, you want to be in bonds, and you want to be in commodities, right? Meaning gold, oil, silver, corn, wheat, all that kind of stuff, right? So you want to diversify across all those, right? And the reason why you want, and there's a specific proportion, by the way. You want to have a certain amount of stocks percentage, a certain amount of bonds percentage, a certain amount of commodities percentage, right? And you do that so that protects you against all the different possibilities that could happen, right? Let's say a high inflationary period like we're having right now, commodities are very valuable. You see oil companies shooting up like crazy, mining companies shooting up like crazy. It's a very good time for commodities right now because of this high inflation, right? Stocks also tend to do fairly well during high inflationary periods. Okay? Bonds do not. Bonds do very badly, right? You see the price of bonds, if you're watching this, interest rates are through the roof, right? When interest rates go up, bond prices go down, right? So bonds are getting hit, but you're protected because you have commodities and you have stocks, right? So the idea is to reduce your risk a lot doing that, okay? So what we've done is we've built a strategy that uses his main principles for reducing risk, and then we've added leverage to it, okay? We bought a bunch of these triple leveraged NASDAQ, triple leveraged S&P. You can look at the tickers. UPRO. UPRO is one of them. UPRO. Another one is TQQQ, right? And then we do the same thing with commodities. We leverage them. The same thing with bonds. We leverage them, right? And we basically take the whole Ray Dalio idea of lowering risk through diversification, and then we add leverage to it, okay? And this is what ends up happening, right? So you can see here the blue line, like it's very clearly better than the benchmark. In this case, the benchmark, the yellow line, this is the S&P 500, right? So this is that 10% a year. What most people, if you go to a financial advisor, they'll tell you to buy S&P 500, right? Like everyone will tell you that, right? This is how well it does, the yellow line. And then this is how our strategy does compared to it, the blue line, right? You see at one point in time, we're up almost 2,500%, right, since 2010, really just absolutely demolishing the S&P 500, blowing it way out of the water, right? And that's because we're taking on that leverage, right? We're taking on leverage, so it is adding more risk, but we're able to take away risk because we're using Ray Dalio's theories of diversification, right? So we've done this over a 14-year period, and you can see how it's done over this very long period of time, right? This one, average annual return, 22.6%. This is over a 14-year period almost. That's versus the S&P 500, which done 13%, right? S&P has done quite well lately. We almost doubled it, right? And then over a longer time period, it did 400%. We did 1,300%, right? So it's almost, what is that? More than 3 times your money, right? So if you're planning a retirement or whatever, and you had put your money into this instead, you would have 3 times more money now than you would have had from the S&P 500. Or in other words, you would have had 13 times more money than you put in, 1,300% return, right? Okay. And that's also doing it. The volatility is a little higher, right? The max drawdown is higher, right? So we are taking on more risk, right? But we're also getting that much higher return, right? So we're basically, we're taking a little bit more risk, but we're doing it in a smart way, so we're able to get these high returns, right? Okay. Again, if you want, you can see the full breakdown of trades. You can go into here. If you're interested, what exactly was this thing doing, right? You can see exactly here. We'll download it, right? And you can see this is basically how the strategy worked, right? So here you can see, it went in, it sold. These are all the different tickers it has. As UGL, has DIG, right? DIG is like a leveraged oil thing. TMF is leveraged bonds, right? And it's basically here. It's buying and selling these things, right? And automatically adjusting itself over time, making sure that you have the optimal portfolio and you're making money throughout the whole process, right? Okay. So there you go. That's our diversified leverage strategy. So if you want to see this more of like an ETF long-term trading type of strategy, it's much longer term in nature. If you want to see something like that, this is a strategy that we can do like this. We could build much more complex portfolios like this. If we want to build, we have a custom ETF thing that uses crypto. We can do this with a lot of different assets and in many different kinds of ways, right? Okay, so it's diversified leverage, right? And then I'm going to show you one more here. All right, and this is our Congress trading strategy. It's another stock trading strategy. So I promised you that I'd show you that. Okay. Now this one's kind of a funny one, right? I know people have talked about this a lot lately. Okay. What this strategy does is basically invests in all the things that Congress invests in, right? So Congress meaning senators and governors, right? Where they have to, when they buy something, legally report it to the government. They say, hey, I bought some shares in Microsoft, or I bought some shares in Google, or whatever the heck they're buying, right? They have to announce that, right? It's insider trading otherwise. It's illegal, right? And we could do this actually with insider trading. We could do this in a bunch of other ways too, right? But basically, the idea is that these guys are the ones that are setting all the laws, right? They have definitely not only information that most people do not have, but power that most people do not have. If they own Microsoft, they can make it do better, right? Not only can they predict that Microsoft will do better, but they can actually pass laws to help that company, right? So they have a lot of power, right? So the things that they own is probably things that you want to own too, right? So this strategy specifically, you can iterate a bunch around it, and I'll show you. We tried a bunch of different things around this, right? You could change the strategy, like how many days do you want to wait, right? So specifically 28 days and 4 minimum purchases, right? You could play around with this if you want to. So meaning we're looking back the past 28 days, what are members of Congress buying? And we want to buy only things that had at least 4 purchases, right? So at least 4 members of Congress bought it, and that's enough of a signal for us to own this thing too, right? Like, oh, 4 people own it, that means there's something going on here, right? It has a lot of influence, right? So this is basically that breakdown. Again, if you want to go through it, you can get all the details here, the whole tear sheet, right? But the gist of it, we did on average about 17% per year using this strategy. And this is, by the way, over a time period when the stock market was doing very badly, right? This is from 2000. I only have data going back a year, so we had to start at this point. I would love to go back further, but you can tell we've been clearly very much above the benchmark the whole time. The yellow line in this case is the S&P 500, right? Because it's stocks. We compare stock strategies to the S&P 500. We compare crypto strategies to Bitcoin, right? So here, there's the S&P 500, the yellow line. You can see our blue line, our strategy clearly above it the whole way through, right? Not even close. Like this wasn't even close to a competition, very far apart from each other, right? And you can see since the very beginning, the stock market was not doing very well, right? There's periods of time where it fell quite a bit. We're still doing all right, you know? And we made 38% over this time period when the stock market, the S&P, only did 6%. So we absolutely destroyed the stock market. On an annual basis, 3 versus 17%. What is that? That's 6 times more than the stock market. It's quite extreme of a difference, right? Our Sharpe ratio is also better. It's 0.64 versus 0.23. And our volatility is quite, it's a little bit more volatile, actually. We have a 25% volatility versus 17%. So it's a little bit riskier. That's probably because we don't own as many stocks and probably because there's a lot of like tech companies in there, right? But overall, we made way more of a return. So that little bit of extra risk is very much worth it, right? So really good strategy. This one's very interesting as well. Makes a lot of sense to invest in something like this, right? Insider trading, basically, right? So you're allowing Congress to basically inform your trading so you can invest in this stuff, right? And again, this is one type of strategy. We can do a lot of others like this too. We could look at other insiders, just trade off of insider trading. There's a bunch of other things that we can do, right? So that's our Congress trading strategy, all right? Okay, so those are some of the examples I want to show you. Okay? Now, hopefully you guys got a lot from that. You can copy these strategies manually if you really wanted to, right? But if you guys are interested in learning how to code this stuff, if you want access to this code, if you want to learn how to build these things yourself, learn how to modify them, well, we have a full out course, right? This is a 12-week long course they could actually take on this. Let me show you the link to this. Okay. Here's our full out course on algorithmic trading if you want to learn about this stuff in detail, right? Today, we didn't have a long time. It's about an hour that we're going through this. In this course, we're going through it in 12 weeks, right? 3 hours every week, right? For 12 weeks long. So you're really going to get very much immersed in this. You're going to get all the code. You're going to learn how to make these things yourself. You're going to learn how to modify them. You're going to get a lot out of this, right? So this is our algo trading course, okay? You can read about it here, the learning outcomes that we're talking about. This is our curriculum. Like I said, it's 12 weeks long, right? Divided up into 3 parts. Part 1 is getting your fundamentals down, right? So week 1, we're going to talk about course introduction, get you all set up. Week 2, we're going to get you all situated with Python. If you know Python, it's going to be a refresher. If you don't know it, we're going to teach you the most important things about Python in 1 3-hour period, right? So you're going to get to know all the basic things about Python that you need to know. You don't need to be an expert at Python. You need to be able to use it well enough to be able to do things. We also show you how to use a lot of AI tools. Copilot, ChatGPT will show you how to use those things to write a lot of code. So you do not have to be a coding genius to do this stuff, right? I want to highlight that. So just in case you guys have never coded a day in your life and it sounds like the craziest thing in the world, we definitely make this thing a lot easier for you using all these AI tools, right? Week 3, we'll get your first back test set up. We'll show you how to install this stuff and run a back test and actually see how this stuff works. You'll be able to generate those graphs that I saw today, all the trades, all the tear sheets. You'll see exactly how all that works. Week 4, we'll talk about pandas, not the animal, but basically it's a library in Python that allows you to do a lot of data science stuff. So you learn how to do data science and how to analyze information, download data from websites and manipulate it, all that kind of stuff, right? And that will be part 1, okay? Part 2, we're going to show you how to run a bot live in the cloud. So you'll actually be able to hook up a broker by day 5, right? If you want to with real money, I'd recommend starting off with fake money just so you get a handle of it first, right? But in week 5, we're going to be hooking up your broker and you're actually going to see trades going across and doing this. And also in week 5, we're going to start a trading competition where everyone in the class, we're going to see who does the best, who makes the most amount of money by the end of the class, right? It's something that we started doing recently. And I'll show you guys the results of the 2 classes we have running right now that have these competitions going on, right? So week 5, you get a bot running. We'll start running this competition. We'll see who can make the most money by the end of the class, right? Week 6, we'll talk about market mechanics and how what types of order types you have, how do the markets work, right? Week 7, we'll talk about stock and economic data, how you can download that and work with that sort of stuff. Week 8, we'll talk about how to analyze your financial performance, right? How do you know if your strategy is doing well? And then we're going to build a live bot together, right? So if you have any trading strategies in mind, ones that you maybe have seen on YouTube or you've seen on the internet, and you're like, this might work well, we can build that together in week 8, right? Week 9, we're going to build a debt trading strategy. You're going to see a case study on how to build a strategy from scratch and using economic data, using different kinds of data, not just technical analysis, but a lot of different things, right? Week 10, we'll go through trading bot examples. You'll see a lot of the ones that we ran today. You get the code for them, see how they all work, all that sort of thing. Week 11, we'll do the same thing. And then week 12, we're going to give you a nice taste of machine learning. And those of you that don't know what machine learning is, it's basically the fundamentals behind artificial intelligence, right? So you're going to learn how to use AI to actually start running your bots, right? It's very cool stuff. We have an entire class just dedicated to machine learning if you guys are interested. But this will give you a nice introduction to it and get you started so you can start using AI in your bots and start trading that way, right? Very interesting field. There's a lot of really, really cool stuff that you can do, right? So that's our course, 12 weeks long. You're going to get really immersed in this. You're going to get a lot of code. You're going to have a lot of strategies that you can run. And hopefully, even before the class ends, you guys will have made some money, right? Okay, so how can you get into this class? How are they structured? How is this class structured? Well, we have 3 different plans. We have self-directed, we have live classes, and we have project help tutoring plan. Each one of these have more features than the last one. They all build on each other, right? So self-directed is the starter plan. Then we have live classes that builds on that. Then we have project help tutoring that builds on that, right? So self-directed, basically you get access to all the code and all the videos. However, you're going to have to kind of go through some of this stuff yourself, right? You're going to be mostly self-paced, right? You'll have access to some help, right? If you need to get on a one-on-one call, we can do that. If you need text message help through Discord, we can do that. But for the most part, you're going to have to figure out kind of how to do this yourself, right? But you'll have that code, you'll have those videos, so you'll be able to go through all that together. You also get a chance to be part of our community, so a lot of our community can help you out as well, right? A step up from that, right? You're going to get the live classes, right? So basically it has everything from self-directed, which will give you all the course recordings, all the code, access to our community, and you're going to get a lot more support. First of all, you're going to get a lot of one-on-one time. I spent a lot of time with people going through different strategies that they're building, helping fix bugs, helping things work, right? And then importantly, you're going to be part of our live classes. And this is what everyone really loves. It's a Zoom class, meets basically once per week, right? This next one, I think, is going to be on Wednesday nights, right? Meets once per week, about 2 to 3 hours per week. And we're going to be going through this live together, right? Which means that you're going to be able to influence what we go through in class, right? If you want to cover one topic more, we can do that. If you want to try to build an algorithm, we can do that. Or if you get stuck somewhere, you don't know how to do this stuff, you'll be able to share your screen, we can get you unstuck. And everyone's kind of going through this together, workshops, and we're building all this stuff together, right? Live classes, people love this stuff, right? These are definitely our most popular classes, right? And you can join that, and it's kind of like that Zoom meeting. It feels like being in a real class, right? It feels like being in an in-person class where you get a lot of support, right? Okay, and then a step up from that, right? So again, live classes has everything that self-directed has, plus more. And then project help tutoring has everything that live classes has, plus more, right? So project help tutoring, what we can do is we'll give you either a lot of one-on-one time. There's some people that have done this, and that we just basically every week we kind of just go through things together. I spend a lot of time with some of these people, like, hey, you want to build this, you want to build this. We go through all that stuff. Or you can get software developers to actually build some stuff for you. So if you have a strategy in mind, we can get our engineering team. We have a team of engineers that build this stuff to actually build something for you, right? So if you're really, really serious about the stuff, you want a lot of help and you want to get through this, the Project Help Tutoring Plan is the way to go. You'll also get all the things from before. You'll be part of the live classes. You'll be participating in all this stuff, and you'll get a lot of things out of it, right? Okay. Here's all those plans and their costs, right? So our self-directed plan is at $22.95. I believe we have an early bird special right now too, so you can save a little bit of money on this if you want. Again, this feature, and by the way, also 3 and 5 month payment plans available. You do not have to pay all this up front, right? So if you want to pay over time, you can do that. You'll get access to our video library, right? Lifetime access. You get lifetime access to our library of code. You get access to our community. You get instructor support, right? So if you want to jump on some calls, we can do that. And you get access to our weekly discussion hour, right? Our live classes has all of that plus more. This is at around $49.95, right? Again, if you want to pay this over 3 or 5 months, you can do that, right? You don't have to pay this all up front. Get everything from a self-directed plan, plus you get to be part of these live classes, right? It's 12 weeks of live classes. It's about 2 to 3 hours per week. Okay. You get 6 hours of dedicated live Q&A. So if you need that one-on-one time, you'll get lots of support with that, right? So we can jump on these one-on-one calls, help you out. You'll get access to all future videos and code. You can retake the classes as many times as you want, right? So say you took the class once, maybe halfway through, you got a job promotion or you had to move or something like that. Well, you could retake this class as many times as you want. You can do that. You get help with 2 personal projects, right? We're going to be doing 2 projects throughout the course that you'll get some help with. You'll get to know your other classmates. That's another really good thing, is you get to know everyone else in the class. And a lot of people end up working on projects together. It becomes very communal. We all get to know each other, which is a lot of value that you get from most schools, right? You get help with your resume or interviews if that's what you're trying to do. If you're trying to get into this field, you want to go work at JP Morgan, do this stuff, or some hedge funds or whatever, right? Or if you just want to get into the software field, we can help you with that, right? And then you also get unlimited email and chat Q&A, right? So as much help as you need there through emails and chat, okay? Or if you are really serious about this stuff, you really, really, really want to build a great algorithm and take it to the next level, right? You want that super, one-on-one support. You want maybe our software team to help you build some stuff, right? Then you could take this Project Help and Tutoring Plan, and this will get you that supercharged thing, right? The classes are $7,095. Again, you pay over 3 or 5 months if you want to do that. You get everything from self-directed and everything from live. So you get those live classes, you get the video recordings, you can retake the classes as many times as you want. But on top of that, you're going to get help with a custom project. So if you want our software development team to actually build things for you, write code for you, we can do that. Or if you want some one-on-one time and lots of it, we'll be able to support you all with that, right? So you can get lots and lots of help with that, right? So let's say if you want to do this, right? So let's say you want to buy this class, right? You can click on select option here for live classes. It'll take it down to here. Here are our upcoming classes. These are our upcoming live classes. We have one that's starting in June, on June 28th. So that's in 21 days, so in 3 weeks. Actually, yeah, about the same time as this meeting. If you're able to make it to this meeting, you should be able to make it to this class, right? Again, 12 weeks long, excluding holidays. We say 8 to 12 hours per week. It kind of depends on how quickly you want to go. Every Wednesday at 8 p.m. is when we meet, and it's again about 2 hours or 3 hours per week, right, in live lectures. Okay? We also have one that's starting in July, one that starts on July 27th. Okay, also 12 weeks. This one instead is going to be on Thursdays, right? Thursdays at 8 p.m. right, Eastern time, or 5 p.m. Pacific. Okay. And again, 2 hours to 3 hours per week. And if you want to join this one in July, there's an early bird special going on, so you can save yourself 20%. Which on a live class is like almost $1,000 so you guys are saving. So if you guys want to save some money, then you can buy this now. This sale is only going on for like another 2 weeks or so, right? So if you want to save yourself 20%, $1,000, use this coupon code. You can click on this here, for example. All right, so if I got this coupon code, I can click on the course, right? And then you fill in the coupon code on the next page right here, right? Apply the coupon and check out. And by the way, if you buy 2 or more of our classes, you also get an extra discount. You get a 10% additional discount in case you guys want to buy a few of our classes. Right? Okay. But going back here, so going back to class, right? So those are 2 classes starting up in June and July. We talked about the course projects. We covered these 2 projects. Project 1 is analyzing investment strategies. Project 2 is building a live bot. We're going to take you through that in the class. All right. If you want to learn a little bit more about me, you can learn about me here. There's a little blurb kind of telling you about my background. You can also see my LinkedIn, right? Everywhere I've ever worked, and go into fine details if you want. That's cool. So you can see my LinkedIn there, right? And then if you want to see some testimonials, I think this is probably the most important thing, is seeing how other students did as well, right? You can see some of our past students, right? You can see a game who actually even started a website around this. He's actually become kind of YouTube famous, right? He's been doing quite a bit of stuff with trading strategies, right? There's Renee that's been doing this stuff as well. There's Santayan, right? And then if you want to see more of them, you can actually go into the top here. You can go more and testimonials, and you can see a bunch more testimonials and kind of how everyone went through the classes and what they thought, right? So you can see all this stuff here. All right, we've had quite a few people take our class at this point, where we have a lot of very satisfied customers, and that's something that we pride ourselves on. And you can watch these videos and learn about each one of these people and how they did in the class. All right. Okay, cool. All right, so that pretty much brings us to the end of our presentation. All right, so any questions, guys? All right, so you guys have been sticking around to the very end here. All right, any questions that you guys have for me going through all this stuff? I'm gonna give you guys a little bit of time to write this out. If you guys want to ask any more questions too, by the way, like I mentioned before, you can book a call. That's probably the best way to do it. I'm going to post this link again here. That's our book a call page, right? If you click on that link, this is what it looks like, right? LumiWealth.com/book a call, right? And it's this little calendar that comes up, and you can just pick a time, and you can speak to someone one-on-one, ask whatever questions you need to ask, and they'll be able to help you out with all that, right? Cool. You guys can also email me too. You probably have my email already because you're probably getting some emails from me. You can always reply to those, or you can send me a message at rob@lumiwealth.com if you have any questions around anything that we've covered. Right. Okay, cool. I'll give you guys a few more seconds here to type out your questions if you have any. Right. I hope you guys enjoyed that, right? Took you through a couple of our different strategies. Like I said, we have lots of them now. We've been building quite a few of them, and they're getting better and better every year. I'll tell you that much. When we first started doing this 4 years ago, it was hard to kind of just get things moving. 4 years into this, we now have a lot of strategies, and we're starting to really hit our stride with some pretty impressive stuff. So I hope you guys liked all this. Okay, cool. All right. Well, it's been a pleasure. Thank you very much all for attending. This has been a lot of fun. I hope it was as fun for you as it was for me. I really appreciate you guys being here, and I hope to see you in some of our classes going forward. All right. Have a good night, guys. Thank you very much. Bye.